Hello, everyone, and welcome to this webinar about the future of corporate reporting. I'm really pleased to have such a large audience here today, so thanks so much for joining. And I'm really pleased about the topic that we have today as well. My name is Karin Ekberg, and I'm the CEO of Leadership and Sustainability. Leadership and Sustainability is actually now nearly 9 years old. We work as consultants in the strategy area, but we also work as verifiers and auditors for HIG BRM, FEM, and FSLM, and for many other programs as well. I wrote my first sustainability report more than 20 years ago at ASSA ABLOY, the world leader in opening systems, where I was responsible for sustainability globally. So reporting has stayed an area that I think is of utmost importance, and that's also why we have this webinar today and why I'm so happy to be here with you today. And so let me, before we start discussing the actual topic, let's just inform you about the webinar features. So you are all on mute today in order to ensure the best audio quality. During the Q&A session, we can open up so that you can speak, or you can also send your questions. So please feel free to send us any questions during the presentation via the question function. So on the right-hand side, you can see a screenshot of the webinar window, and you can find an icon there with a Q&A window in the bar at the bottom. Here you can type in your question, and then you send it to us. And we will reply to your questions at the end of the session. And after today's session, we will provide you with a link to download the presentation and also the recording. So you will have everything available to you later. And so the agenda for today, what you will learn today, you will have a better overview of the Corporate Sustainability Reporting Directive and its purpose and its scope. You will know more about the details of the European Sustainability Reporting Standards. You will be guided step by step on how to report according to ESRS, following one case study that we have developed for you. And lastly, you will get to know about the services that Leadership and Sustainability offers regarding CSRD and ESRS compliance and other sustainability topics. And so, let me start with an introduction to the CSRD, the Corporate Sustainability Reporting Directive. Corporate sustainability reporting has become a vital aspect of responsible business practices. And as you heard previously, it's not a new topic. Many companies have been reporting for many years, perhaps even some have been reporting for 20 years or even 30 years. But as global challenges such as climate change, resource depletion, and social inequities continue to escalate and really escalate, stakeholders are increasingly demanding greater transparency and accountability from companies about their environmental, social, and governance performance. And they also would like to read the information in a comparable structure, so that there is a clear structure on how the information is conveyed to the reader. And so the CSRD, the Corporate Sustainability Reporting Directive, plays a crucial role in promoting sustainable business practices by establishing a comprehensive and robust reporting framework. And in my experience, the reporting, there's a lot of work to reporting, of course, but it actually also helps you drive your sustainability strategy and your sustainability programs, because you have to put yourself into that structure. You have to report on how you are working with sustainability. You have to report on specific indicators. And this helps you actually to make sure that you are monitoring your own strategy. Are you really making progress? Or are you just doing the same thing year by year by year? And here we have the support of the reporting. So it gives you that structure to check in on your strategy, to report also internally about your sustainability strategy and your programs and roadmaps. So the aim of the CSRD for companies is to publish comparable, detailed, and reliable sustainability information on the basis of the European Sustainability Reporting Standards, ESRS. So the CSRD sets reporting standards for more than 50,000 companies in the EU. via the ESRS. And the reason for CSRD adaptation is to inform consumers, investors, and stakeholders about the sustainability impacts of businesses. But as I mentioned, of course, also for internal purposes. Every so often we see that the sustainability reports are read by employees of the brands or companies. Additionally, high quality sustainability reporting can lead to better funding opportunities and potentially lower capital costs long term. As businesses increasingly recognize the value of its potential of sustainability reporting and its potential to drive positive change, the CSRD will play an important role in shaping the future of corporate sustainability and ESG disclosures. And we see already, this is of course, as you know, a European Union law, but we see also that these types of legislation is also being rolled out or are being developed now in other areas of the world. And so who needs to report? Of course, that's the first question. Am I in the scope or am I not? So first there are, and it's a bit complex, so we have a few complex slides ahead of us, but I will not go into too much detail here. But first, there are large companies that meet two of the following conditions that need to do CSRD reporting. Either they make 50 million in net turnover, they have 25 million in assets, or they have 250 employees. So they need to meet two of these conditions. And the next group that is included are listed small and medium enterprises meeting also two of the following conditions: 8 million in net turnover, 4 million in assets, or 50 employees. And the last group, sorry. Now I got too far ahead of myself. The next group that is included are listed small and medium, I had that already. So the last group are non-European Union companies generating a net revenue in the European Union that exceeds 150 million and have at least one subsidiary or branch located in the European Union. So this is the high-level picture, and let me now go to the bit more detailed picture, and I will not go into all detail here. If you are a company not sure and you are not sure when and how you are going to report, you can go into this chart and have a look here. Basically, what you can see is that all the green boxes means a yes, you should be reporting, and the blue boxes means a no, or that you have to do the next triage question in order to find out where you are. And we also have it listed in a table here, because there is also one more differentiation, and that is that either you will have to report in a consolidated report together with your business report, with your annual financial report, or you can report via an individual sustainability statement. So that is also depending on the size. The time when you have to report is also depending on the size and type of company. So you can see that in this table here, in this chart here. And the CSRD is part of the European Green Deal, and it relates actually to many different regulations. So it's like it's like a spider web, let's say, of different legislations that are drilling into the CSRD or informing into the CSRD and of course into the ESRS as well. Its main disclosure requirements are set out by the European Sustainability Reporting Standard. And the ESRS, it details the sustainability information that must be published across the different sustainability topics. And we will hear much more about that a bit later in this webinar. In addition, the CSRD contains reporting requirements relevant to the Sustainable Finance Disclosure Regulation. And this is about the information that you need to include related to the taxonomy regulation. And so this discloses the alignment of the company's business model to sustainable economic activities. Sustainable activities are described in the classification system defined in the EU taxonomy legislation, and this is commonly known as the Article 8 Sustainability Report. Also, the CSRD indicates where the sustainability information must be disclosed in the annual report and how the report must be published. This has to be aligned with the European Single Electronic Format, also known as the inline XBRL. So there are, as I said, several different legislations linked to that. And finally, it also dictates that once the full annual report is complete, management reports for CSRD are subject to limited assurance to be carried out by independent assurance service providers. So they should be independent. They should not have been working on the report, for example, before they do the assurance. And these reporting requirements are intended to provide a more holistic view of a company's impact and performance. And you can see here the intention is really to try to drive to have sustainability integrated into the actual business operations implicitly. It's not directly said here, but and this is also something that we think is really, really important for those of you who are sustainability ambassadors or sustainability managers within your own companies. Please try always to do as much as possible the work integrated with your business processes. Try to understand what is the business strategy we have and seek to integrate and engage and harmonize your sustainability strategy with that business strategy. And of course, the perfect situation would, of course, be if you have an integrated strategy. But I think many companies, and that's not bad at all, it's just a journey. Many companies are still far from that. But what this means also, this means that integration means also that you involve other business functions, and that you don't have only one sustainability department, so to say, leading everything. You need your business partners in the different business functions to support you with your sustainability strategy. And then you can, over time, be successful. It takes a lot of time. You need to build bridges to these people, to sourcing, perhaps to product development, and you need to have them involved and have them becoming knowledgeable as well about the topic. And so you will, over time, be able to have a really successful sustainability strategy. Okay, so then if we move on, we also have the combination here where you should include the sustainability statement. So the sustainability report, in accordance with CSRD and ESRS and the EU taxonomy, needs to be disclosed as part of the management report in connection with the annual financial statement if the company is traded on the EU regulated market. So that's the differentiation. If the company is traded on the EU regulated market, you need to have that integrated report. So, so this also applies in the case of consolidated reports. Any company that is a parent undertaking of a large group governed by the law of an EU member state is required to report on sustainability matters at the consolidated level. And the parent undertaking must prepare a consolidated sustainability statement. The content of the consolidated sustainability statement must meet the same requirements that apply to the individual sustainability statement. So there's no difference between the content as such. It's just how they are or are not integrated into the annual overall report. And now, let us move on now from CSRD and into the actual ESRS standards. So these requirements and guidelines, they are documents as part of the European Sustainability Reporting Standards. And there are actually several standards, and you will see that here. I have an overview a bit later about the different standards. So what are the ESRS? Since January 2024, ESRS have become a key pillar of sustainability reporting in Europe. With the implementation of the CSRD, the adoption of ESRS has become mandatory for companies within its scope. And this implementation marked a significant milestone in the journey towards standardized and enhanced non-financial reporting across the continent. So the framework, the ESRS framework, aims to provide a transparent, accurate, and comparable view of companies' environmental, social, and governance, short ESG, impacts, risks, and opportunities. And this is also, to some of us, a bit new, that exactly these terms are used: environment, social, and governance, ESG. Previously, governance was a bit of a, let's say, a small stepdaughter in the family. And the ESRS, they were developed by the European Financial Advisory Group, EFRAG is the short for that organization, together with the Committee of the European Commission and the European Environment Agency. So the ESRS standards, they align with existing international reporting recommendations and EU frameworks, and they ensure interoperability with initiatives such as the EU Green Deal and the Sustainable Finance Framework. And thereby, by leveraging the established global standard setting initiatives, also such as GRI standards, the ESRS aligns with international sustainability reporting frameworks. Many of you may already have been reporting according to the GRI, the Global Reporting Initiative, and so you will see that there is quite a lot of alignment in there between those two sets of standards. And now, if we move on a bit more into detail, the ESRS has several different elements in its standards. So they have a sector agnostic component of the ESRS, and these are two types of standards. They are cross-cutting and they are topical ones. And the two cross-cutting standards are the general requirements, ESRS 1, and the general disclosures, ESRS 2. And so you will see all of these standards are really they look like standalone standards. So they are separate documents, and most of them are quite long actually. So it's a big family of different elements in these standards. And then we have the sector agnostic topical standards. They are structured in 3 pillars: environment, social, and governance related standards. And again, the environment related standards can be divided in 5 ESRS groups, as you can see here on this slide. And the social related standards, they can be split in 4 detailed ESRS, whereas the governance related standards consist of only 1 ESRS. And there are also other ESRS, like for small companies, LSME, and they are important for listed SMEs, for small banks, and for insurers. And additionally, there are also sector-specific standards. They are available already for oil and gas and mining, and they will be available also for textiles and accessories over time. So we know that there are drafts available, but there is yet no formal documentation available, and I have not seen any draft as yet. And now let us dive in a bit more detail regarding those cross-cutting standards. So these standards are mandatory, and as previously mentioned, there are 2 distinct cross-cutting ESRS. These are the ESRS 1, the general requirements, and the ESRS 2, the general disclosures. And the ESRS 1, they set the general requirements and principles for sustainability disclosure expected from applicable companies. Additionally, it mandates specific disclosure requirements on your own workforce, including governance structures, business strategies, and objectives. So there is a lot about how you need to, and what the principles are that you need to apply when you report. And it also, and the ESRS 2 specifies the essential information for preparing a sustainability statement applicable to all companies, regardless of the activities or sustainability relevance. So both of those are really very strict, and you should follow basically everything that is included in those standards. And the ESRS 2, it requires you to disclose specific compliance information, such as approximations in relation to your company's value chain and your boundaries. And it also mandates information on your materiality assessment and your key performance indicators. So here is where you will add the information about your materiality assessment. And we will not talk a lot about the materiality assessment in this webinar. We have done so in a previous webinar. But of course, the materiality assessment is, so to say, the entrance door into deciding what you need to report on exactly according to the ESRS. And now, in contrast to the cross-cutting standards, topical standards, they are not mandatory per se, but rather they should be reporting against wherever a topic is material. So that is here where the materiality assessment basically helps you decide which topics you should be reporting about, and also, of course, managing. And they are instrumental in enabling companies to evaluate and report their sustainability performance in specific ESG areas, and enhancing thereby also the granularity and relevance of their disclosures. So the first topical standard, environmental, focuses on climate change and is therefore the key environmental standard that will apply to most companies. If you do not intend to report about climate change, you actually will need at least to explain why you are not reporting, why it is not a material topic for your company. And I don't have a good case where that would not be the situation, that climate change is not relevant for any company. But it relates to climate change adaptation and mitigation, the company's energy consumption, risks and opportunities related to climate change, and of course also to your programs and targets and your KPIs. And the second ESRS is environmental pollution. It reports on issues including microplastics, for example, and any pollution of air, water, soil, or food resources. The third ESRS concentrates on water and marine resources. It relates also to companies' water consumption, withdrawal and discharges, as well as extraction and use of other marine resources. And then we have the fourth, the biodiversity and ecosystems ESRS, and the companies here, they need to consider their impact on biodiversity loss, state of species, and the extent and condition of ecosystems. And the fifth and last one in the environmental area is the resource use and circular economy. So inflows, outflows relating to products or services and wastes, how you deal with circular economy, and are included into this section here. And on the social side, we have the first social ESRS, and it requires the companies to report on working conditions and equality and diversity among its own employees, among others. And in general, a negative impact should be prevented in order to guarantee a content workforce, of course. So that's just a small comment related to that. And the next standard includes the workers in the value chain. So companies must additionally address the working conditions, treatment, and opportunities of workers in the value chain. So these two are about workforce, but first your own workforce, and then in the second case, the workers in the value chain. And obviously there might be quite different programs to run related to those two different groups. And the ESRS 2 aims at developing an understanding of the material impacts, risks, and opportunities with regards to workers that are connected with the company's operations and value chain, for example, through products or services or business relationships. So in any case, your upstream supply chain is really important to understand and to make an assessment of the risks, impacts, risks, and opportunities that you do have related to worker conditions and working conditions. And then we have the next social standard, that is the standard about communities and their economic, social, and cultural rights, which are affected by the business operations. And so this is also an important area, and an area that is perhaps not yet that explored by many brands. And then the last social ESRS centralizes on consumers and end users. The personal safety, privacy, and social inclusion of consumers and end users should be considered here. And then we have the one and only governance standard, and that is the one about business conduct. This standard addresses corporate culture with factors including political engagement, corruption and bribery, animal welfare, and protection of whistleblowers. So also quite a broad area, I would say. And as you can see, animal welfare is also included here into this governance standard. And so this was an overview of the overall standards and some of the or all of the topical standards. And now we will move and talk about how to report according to the ESRS. So first, it is about identifying what sustainability topics are relevant to you and your business model. You have a long list from the ESRS, and you then go from a long list to a short list that is specific for your organization. And to get there, you should, if possible, consult with your relevant stakeholders, for example, through interviews, but you can also do that basically desktop by knowing which input they usually give to you. And then through the materiality and the double materiality assessment, you identify the most material sustainability topics. And the materiality assessment as such is quite a big project to do. And there are very strict rules also from CSRD about what the materiality assessment should cover and what you should what the results should be. It doesn't tell you exactly how to do it, but it is quite a strict formulation about how to do about the materiality assessment, so not about how to do it. Okay, so when you know your material topics, you need to align them with the ESRS and gather the relevant data for the disclosure requirements. And just some short information about the double materiality assessment. So why is it called double materiality? Well, it is the concept that provides criteria for the determination of whether a sustainability topic or information must be included in the sustainability report. We have already covered that. So double materiality is the union of impact materiality and financial materiality. Impact materiality refers to an inside-out perspective and looks at what impact a company has with its activities on the particular sustainability topic. And the financial materiality refers to an outside-in perspective and looks at how a company's financial performance or development is impacted by a sustainability topic. For instance, a company's impact on the climate can also be financially material for the company. And in a corporate group, some sustainability matters might not be significant when assessed at the level of individual subsidiaries. However, when these impacts are aggregated across several subsidiaries, they can become material at the group level. So for those of you who belong to group companies, perhaps with several brands or several companies included, you need to include this into your consideration. So there are instances where a particular issue, for example, human rights violation, may be material even if it occurs only in one subsidiary. This could be due to the severity of the impact, often influenced by the specific context of that particular country or region where the subsidiary operates. So if a topic is material on a subsidiary level, it is crucial to provide information on the group level about subsidiary level material matters to ensure a complete transparency and understanding. And for more details about the materiality assessment, you can also listen to one of the webinars that we have held about this topic, and you can find the link here. And now here you see also a scheme about how to identify the relevant disclosure requirements for you. So you see you need to go through this decision tree here, and then you will find out if the topic is if you have to report on that topic or not. And so the first distinction is, of course, is the topic material or not material according to my sustainability, according to my double materiality assessment. And then you can see here that even though you may not have implemented already everything for each and every area or topic that is really material for you, but then you should also be transparent about that. So you can speak about your plans you have to develop a program for biodiversity, for example, or you can explain that you haven't yet collected enough data about biodiversity. And so, but that is really important, this transparency, that we get more transparency about what is being done, but also about what is not being done if the topic is material. And so then if we move on here, you see a screenshot from a table, and this is a huge table, and it contains the ESRS data points. So EFRAG released that Excel tool listing all disclosure requirements from the sector agnostic ESRS set 1. So this list helps in preparing the first sustainability statements under ESRS. It includes 161 mandatory data points and 602 data points that are subject to the results of the materiality assessment. And the list of ESRS data points that has been prepared by adopting the same methodology as the one used for the development of the draft ESRS digital taxonomy in order to ensure consistency. So it's a very, very, very long list. And really the materiality assessment is very important here to help you to know what you should be reporting on and what you should not be reporting on. And as you can see, there are like 161 data points that are mandatory. But when you dive in, you see that some are perhaps a bit similar, or you can cover that in a short passage or a short text. And now I want to explain a bit how these data points work. And we will take an example from the ESRS number 5. So first of all, regarding the colors, you can see here, the green marked rows, that means that it's an identification of a minimum disclosure requirement. And the yellow one is an identification of voluntary data points. And the blue color are used to identify different tables in the case that you have data requirements where some requirements can be broken down in several dimensions. So this can be, for example, if you have energy consumption and you want to report on for different countries or for different factories, etc. These are the blue ones. And then we have the first columns. They refer to the corresponding disclosure requirement, the DR, and to the related application requirement. And then the white column here with the text links gives a short description of each data point with a link to the respective paragraph in the ESRS. And then this column indicates that a data type is needed. This could be a numerical value, a qualitative description, or any other type of data. So it specifies what type of data that you should report on. And then the next one, a V, indicates whether this data point is voluntary. And some data also need to be under certain frameworks and under certain law, including sustainable finance disclosure, etc. So this is the explanation. And then you also have the last one that is then about different things that are being phased into the reporting structure. And with that, I also will continue with this table because each topic Excel is listed according to the disclosure requirements, and starting with the general disclosures on the materiality assessment process. And then it is followed by disclosure on policies, actions, and resources. Then you have targets and metrics. And lastly, you have anticipated financial effects of the material risks and opportunities. So the tables always contain the same or are structured the same way, independent of which topic they are. And now we will dive into the ESRS EU1 about climate change. And I have an example here where we will move through all the different disclosures that are requested related to climate change. And so let's use that case and go through the disclosure requirements. So this is one of the largest standards with the most data points. And also it is the one that is most likely material to most companies. So disclosure requirements related to climate change mitigation and climate change adaptation, it also covers energy related matters to the extent that they are relevant to climate change. And this standard also covers disclosure requirements related but not limited to the 7 greenhouse gases. So it is not only carbon dioxide, but also all other greenhouse gases that should be reported within this requirement. And then the first disclosure requirements include a transition plan for climate change mitigation to achieve climate neutrality by 2050 and limit global warming to 1.5 degrees as per the Paris Agreement. And it can be done as follows. The foundation of your climate transition plan is a comprehensive CO2 footprint, and the footprint must be in accordance, of course, with the greenhouse gas protocol. And then you have the next one. You should develop a decarbonization roadmap. And then the next step, set targets aligned with the 1.5 degree reduction pathway. Ideally, a science-based target, but there are also other programs that are available to you. Then you align your climate transition plan with your business model. You develop KPIs and get approval by the board of directors and supervisory board, and then you integrate it into your governance approach. And just a few points about how to set a science-based target. And this is very general because the science-based target and the initiative about science-based target is, of course, a topic of its own that you can dive into with a lot of different details and a lot of different rules. But what is important is to choose a base year and define a good base year for you, one that makes sense, where you have full and comprehensive data. Then you set, and then of course you have to do your footprinting, you set your scope 1, 2, and 3 reduction goals. And you, if needed, you might need to recalculate your base year emissions. If significant changes are happening in your organization, you may need to recalculate. And then you account for emissions and reductions over time. And you can also hear more about the science-based targets in one of the webinars that we held a few weeks ago about climate change. And then the next one, the general disclosure 2, this is about explaining how policies address the identification, assessment, management, and remediation of these climate-related factors. So regarding compliance, you need to ensure policies align with the ESRS, standards on managing material sustainability matters, and then you have your 4 focus areas: climate change mitigation, climate change adaptation, renewable energy deployment, and energy efficiency. And now the E13, this is about actions and resources in relation to climate change policies and targets. So you should here report on climate change mitigation and adaptation actions, including the resources allocated for their implementation. And you should explain your key actions taken and plan to meet the climate-related policy goals and targets that you have. And the actions need to be described according to the ESRS number 2, actions and resources in relation to material sustainability matters. So you see here all the details that need to be included. list key actions taken and planned, including your decarbonization measures and nature-based solutions, detailed achieved and expected greenhouse gas emission reductions, relate the significant monetary amounts of CapEx and OpEx required to implement the actions taken, etc. So you can see there are quite a lot of details linked to just this one, the E13. Then the E14, these are the targets related to climate change mitigation and adaptation. So you must disclose the climate-related targets you have set to provide an understanding of how targets support climate change mitigation and adaptation policies and manage your material climate-related impacts, risks, and opportunities. So this should include your annually saved greenhouse gas emissions for scope 1, 2, and 3. And it should also include absolute targets, so reduce your greenhouse gas emissions by a set amount, and also intensity target, which is the intensity target is relevant to your actual output as well. So it's linked to the actual production output, or as an operational or as an economic variable. And then you should also report the current base year, your baseline values, and update your base year also after 2030 onwards every 5 years, and include the target values for 2030, and if available, even for 2050, and then updating them every 5 years. You should finally also specify if the targets are science-based and detail the framework, methodology, and assumptions that are used. So that was E14, and now we have E15, and this is about report on total energy consumption and energy mix to give a picture on energy efficiency, reliance on fossil fuels, and the share of renewables. And so you report your total energy use, you include the total consumption from fossil fuels, from nuclear sources, and also from renewable energy. And then when it comes to the high climate impact sectors, they should actually also add a disaggregated representation of their fossil energy consumption by coal and coal products, crude oil, natural gas, etc. And so again, quite specific and detailed requirements. Then when we move on to E16, this is about disclosing your scope 1, 2, and 3 total emissions, and which includes, of course, the scope 1, your direct emissions from your company's own operations, the indirect emissions from purchased energy, and the indirect emissions, scope 3, from the entire value chain, both upstream and downstream, and beyond scope 1 and 2. So we all know that scope 3 is the most difficult one to calculate, to do the footprinting on, but also then, of course, to manage and to reduce the emission there. And then you have your total greenhouse gas emissions also. And here you see a representation of the different scopes. So you can see what I just talked about. Scope 1 are the direct emissions based on, for example, oil that you are burning on site. Scope 2 are the indirect emissions for example, from electricity, and the scope 3 is basically everything else that you can think of. And then, so if we now move to the next one, the E17, and this is about the greenhouse gas removals and mitigation projects financed through carbon credits. So you need to disclose your greenhouse gas removals and storage from your own operations and your upstream and downstream value chain that you may have developed, of course, if this is relevant for you. And for example, if you disclose a net zero target in addition to your gross greenhouse gas emission reduction targets, it shall explain the scope, methodologies, and frameworks applied, and how the residual greenhouse gas emissions are intended to be neutralized by greenhouse gas removals in your own operations and value chain. And of course, the objective of this disclosure requirement is to provide transparency and comparable information. And of course, you only report about this if it's actually applicable to your business and to your company. Then we have the topic of internal carbon pricing, and I will not go into too much detail here. It may not be relevant for all companies that are joining this webinar here. We have also the E19, the potential effects from material, physical, and transition risks and potential climate-related opportunities. And here you need to disclose the anticipated financial effects from material, physical, and transition risks, but also outline potential benefits from climate-related opportunities. And I think this is a really good perspective, because, I mean, we always speak about impacts, risks, and opportunities, but very often the opportunities are a bit dismissed or are perhaps difficult to leverage. And so I think it is really important to think about that as well. What are the opportunities in the programs I have? And so you need to disclose the financial effects. And then additionally, you should also outline your potential benefits from the opportunities, perhaps cost savings and market potential. And we all know that the basics of energy savings, usually you can save money as well. And another important point that should be disclosed is the information about that it is aligned with financial statements, and that the quantification of financial effects from opportunities, it's not required if you don't want to disclose that. All right, so now let's move on to the digital reporting requirements, the EU taxonomy. So this is quite a complex area in my view. So companies that are required to report under CSRD, you will need to implement the ESRS XBRL tagging to transform your sustainability reporting disclosures into a computer understandable format. So it needs to be computer readable. And the ESRS taxonomy, it translates the ESRS and this Article 8 that I talked about from the EU taxonomy regulation into the XBRL format. And XBRL is short for Extensible Business Reporting Language, and it serves to standardize the reporting flow from the information provider to the information recipient. So it can be imagined as a modular system of individual reporting elements. And for certain reporting purposes, reporting templates are developed and that describe the relevant elements and links. And then this digital ESRS XBRL taxonomy will allow you to tag the sustainability reports in a structured, machine-related way. And we don't have that taxonomy yet, at least I haven't seen it yet. It is expected now, let's say. So let's see what it looks like. It will be interesting to see. Then we have the ESEF. So this is another rule regarding how to prepare the sustainability reports in a specified digital format so that it can be read. And then ESEF is the regulation that mandates those entities to prepare the sustainability reports in that digital format to make sure that it's machine readable and also easy accessible. And yeah, so I think I will not go into all the details here. I think I would rather move forward. So first of all, I would like to summarize, and then we will take questions as well. But I would like to summarize, in order to report accordingly to CSRD and ESRS, you first need to understand the ESRS structure. And then you conduct your double materiality assessment, and then you know or can identify which relevant, which disclosure requirements that are actually relevant for you. And you can then determine the internal responsibility for the data collection. Perhaps you have done that before. You collect the data, and then finally you can prepare your report, and you can make your report the assurance project as well. So, and very simply put, after all these details that I have presented previously, and now a very, very high level summary. So what are the conclusions? Well, the long-term benefits is that you can avoid penalties, financial and operational consequences, of course. You can foster trust and loyalty among your stakeholders. You can have a holistic approach, environment, social, and governance. You can identify and mitigate risks, and you contribute to long-term profitability. And as I mentioned at the very beginning, I think the regular reporting really helps you to manage your sustainability strategy as well. And with that, I would now like to open up for questions. So let's have a look if there are any questions from the participants. Let me see here. Okay, there seems that there are many questions that have already been responded to. Thanks a lot. Any further questions? Do we have any questions from the audience? I see that several questions have already been responded to. Anything else? I know that that was a lot of theory, and it's really a very comprehensive, a very big area, let's say, in simple words, but also very complex. Needs quite a lot of attention to detail in order to understand and dive in there. No? No questions left. Okay. Yes, so the question is about the ESRS requirement regarding a sustainability statement, and if I have any suggestion how it should look like. Well, so that sustainability statement is really what we have been talking about now, the entire report. So it's called sustainability statement, but it's actually the sustainability report. So all the things that I have been talking about right now apply to that reporting. Yes. Okay, we have a good question here. I think we need to further understand the mechanism and how these regulations are impacting the manufacturing countries like Bangladesh, for example. And it's a good question because obviously Bangladesh is outside the scope of the CSRD. But of course, we know that many brands are sourcing in Bangladesh, which means that when they start reporting, and even when they start with a materiality assessment, perhaps they do a specific country risk assessment, perhaps they include Bangladesh into their country risk assessment, and they should do that. If they are sourcing from Bangladesh, they should include that if they do country risk assessments. And then they may identify risks, they may identify impacts, but perhaps they also identify opportunities how they can help serve the industry in Bangladesh and how they can help improve the sustainability performance in the factories in Bangladesh. And of course, I'm talking now because you asked about Bangladesh, but this is of course true for any other country where many brands are sourcing. So I think that over time there will be a significant impact also on the factories in Bangladesh because the brands who are based in Europe or who have a significant operation in Europe, even if it's an American brand, let's say, they will need to follow the CSRD and the ESRS standards. And you saw the level of detail in all the questions that are asked. It's a lot of detail that is being asked for. And so I think there will be a significant impact on also on countries like Bangladesh. So I hope that answered your question, even if it was perhaps a general answer. Yeah. Let me see, any other question? Yes. So there's half a question here. Through the chemical treatment, production in fabrics used to make. Could you please start that question or begin that question for us so that I can see the whole? So, but the second part of that question is how far back is this specified in CSRD regulation or left more vague than this? It's vague in that sense that the company that is conducting the materiality assessment needs to understand its own business, its own supply chain, its own factories. I mean, its own factories, but also the factories that the company is sourcing from, and need to understand are there chemical risks specifically in certain factories, or are there general chemical risks? And usually in many industries, in many sectors, chemicals management is an important topic, is a risky topic as well, which of course, as we know, can have an influence on the environment, can have an influence on the workers, but also on the consumers when they, if we're talking about textile, for example, when they wear the products. Then there is another question, is the standard methodology for evaluation of carbon footprint, if it's established? Yes, there is the greenhouse gas protocol that I mentioned. You can Google greenhouse gas protocol and you will find there are several different standards about that, and you should really follow that standard. There are some other standards available as well, ISO standards, for example, but basically they rely back also on the greenhouse gas protocol. Yes, and then the next question, by when should an organization release their sustainability report? Is there a start date if an organization has not started yet? Yes, it depends. If you remember the table that I showed at the very beginning of this webinar, there you can see, depending on the size of the company and type of the company, you will need to, the first set of companies, they need to report for the year of 2024 or their financial year 2024 in 2025, and then it's like sequenced in year by year. So already next year, many will begin reporting. What about manufacturing facilities to US market? Yeah, there is not yet a similar standard in the US. So currently, I cannot say what is in the pipeline or so either. If you don't have sufficient data to cover a specific ESRS, is it acceptable to acknowledge this and include it into the report? Yes, there is. So there was one chart that I showed where you can say if the topic is material, you should report about it, but it is also allowed to report that you don't have the data right now. But then, of course, you should be able to say that you're working on it and give a timeline for that. Is there a verification audit requirement? Yes, there is. Then the sustainability statement or the report needs to be assured at a limited level by an approved assurance provider. And every country within the EU, there are requirements at the European Union level, but then every country, every individual country, of course, they have to implement these legislations into their own national legislation as well, and they can then decide what the rules are regarding assurance. Exactly. First part of the above question. Thank you so much. How far back in the value chain is the reporting expected? What tiering of supply chain? This is not defined. It can be tier 4. The idea is really that all relevant risks need to be assessed. So if you have a significant risk very, very far back, and we know depending on the type of company, I mean, for example, mining companies, they are very far back or they have their risks very far back, let's say in the supply chain, or at least very near to the raw material generation. Okay, let me see. Oh, there are more questions coming in. Thanks, this is nice. Can we have the link of the double materiality presentation that you just mentioned? Yes, yes. You can find it also on our blog, or if you go to YouTube, you will also find all our webinars there and all recordings. So if there is anything else you would like to have. And so what are the best practices for collecting, managing, and validating the data required for CSRD reporting? Well, we can only speak from a more theoretical knowledge, let's say, because the first reports have not yet been published, or they are now underway. So I cannot say that there is any. We cannot point to any company that is that has best practice. All right. So thanks a lot for all those questions. And with that, I will close in 2 minutes from now. So let me just also show you one slide about leadership and sustainability. We have been growing quite fast, but slow enough to make sure that we have our structures in place. And we are now nearly 70 persons totally globally. We have several entities also in different countries, in Vietnam, India, Turkey, and also in Bangladesh, apart from our headquarters here in Germany. On the one hand side, we conduct sustainability strategy projects with our brands and even sometimes with manufacturing entities. And then on the other hand, and especially in our local entities, we do a lot of work in the supply chain. And from here, we coordinate that work in our supply chain. So if you are interested in working with us, please reach out to us and let us know what you are interested in. Here you see some of our, you also have the links here. It's only to go to this presentation and you can find the information that I was talking about previously. Here you see some of our team members. And I also would like to point, of course, you have been hearing me for 1 hour, so you can reach out to me, but you can also reach out to Stephanie. She is here on the call and she's also happy to support you and has been responding to the questions here backstage. And so the two of us are the people that you should reach out to. Of course, if you know someone else in our company, please feel free to reach out to them as well. And with that, I would like to thank you so much for your time and welcome back. And we will be sending out this probably towards the end of the week or beginning of next week. Thank you. Bye-bye.